Good morning, everyone. It's Ben Buckner with Ag Resource Company in Chicago. Dan is off to DC for some meetings, but it's Tuesday, July the 8th, and we've got markets a bit weaker today. And again, like we've mentioned the last couple of days, there are really no secrets here. I don't think there's much under the hood. It's to some extent, I think, the return of higher tariffs on at least 12 countries starting August 1st. Those include South Korea and Japan, large importers of U.S. corn. We don't know if there will be retaliation on the U.S. ag sector, but it's unwanted today. We need every demand driver that we can find. But really, I think it's just weather, and weather has been cooperative in both hemispheres so far in 2025. And in the central U.S., it looks pretty good. We'll isolate corn. It does look like we could be building a pretty special corn crop today, given weather to date, weather forecast, and of course, updated crop condition ratings, which I'm sure you're going to see all over the ag market landscape today. But when we dive into the details and we can kind of quantify the risk, at least as we get into NASA's August and September yield estimates, before we get into a lot of objective yield data. And that's, I think, the theme of grain markets, especially feed markets, that we are concerned about oversupply. Lots of sorghum, lots of hard red winter wheat, cheap soybean meal, and I think very probably record U.S. corn yield, record U.S. crop. The U.S. crop on Sunday was rated at 74% good to excellent. That was up counter-seasonally from the previous week and compares to 67% good to excellent. And you kind of see here on the left just how unusual it is to build crop health, at least with respect to crop ratings, after the last week of May or first week of June. So when we look historically as well, this is a rating that, as of early July at least, does sit at the upper end of the historical record. It's not a record high rating, but it is, I think, at the upper end of the last couple of decades. And so you can see on average 67% good excellent, 74% today. Don't see a lot of threats to a downgrade moving forward. But what we want to do is, again, always we're managing risk at Ag Resource. And so we want to quantify this and kind of put this into perspective. And again, I think it's the amount of locations that are experiencing very, very highly rated corn crops. It kind of stretches from Nebraska to Pennsylvania. South Dakota crops, Nebraska crop, both rated above 70% good excellent. Iowa, 86% good excellent, which is not a surprise given the abundance of rain and the absence of heat that we have seen across the Western Corn Belt. That part of the world probably does the best yield-wise, the Western Midwest into the Central Plains. So just wanted to show you exactly what this looks like relative to history. It's not quite an all-time record Iowa corn crop rating, but it is the highest for this particular week, stretching back to 2008. So again, we think this serves as a pretty decent proxy when we combine this with weather to date, vegetation health ratings, and it does give us pretty solid potential. I think to the point that we want to isolate years since 1990 that the U.S. corn crop has been rated in early July 70% or better good to excellent. And so just isolating those years, we want to kind of define the framework, the probability of yield changes we'll see starting in August and into September and October from the USDA at least. There will be a lot of debate over final yields and the weight of the sum of all kernels produced between now and January. But it is, I think, the risk facing us, dead ahead is what NASS does with its kind of not objective yield data in August and September. So when we isolate these years that the crops have been 70% or better good to excellent, we do find that not every year you end up with a yield above trend, but most probably the U.S. corn yield does exceed trend. And since 1990, when crops have been rated at 70% or higher, and generally these years isolated are 73% good excellent or higher, we have seen final yields 2 to 15% above trend. I don't know if we're going to see a 15% above trend or 5% above trend this year, but again, to quantify this, provide the framework, a yield 2% above trend in the U.S. this year. And we calculate sort of just a very simple linear trend yield, 20-year trend at 182 bushels an acre. 2% above that's, 185 and a half. 3% is 187. So we do think that there are non-zero odds that we do see a yield printed, and maybe in the final count, something between 184, 186, maybe 187. So, 2% yield above trend on the margin does add about 400 million bushels to the USDA's current production and total supply forecast. And that is almost a month's worth of ethanol use. So I think that all explains why we've seen the pretty dramatic break in the ag space in general, and corn specifically, and corn just because of weather and just the favorable nature of weather so far probably does have the greatest downside risk to us, I think. As we get into harvest, what does the cash market do to sort out all these large supplies? So this is, I think, what we're trading in the markets today. And again, you're going to see this all over the ag market landscape, but it does make a lot of sense. I mean, we haven't exceeded trend corn yield since 2018. Is this the first year that we do it? All kind of signs point to most likely it's just a matter of degree, and that will be the debate moving forward. Because I don't think a 181 is really insightful anymore. That is an unremarkable number. The markets have been trading this or have been aware of that number since February of this year. It's now the 184 or better, I think, is what the market's starting to account for. And again, the 5 day, 10 day forecasts look pretty good. And I think one of the things that we have highlighted here at Ag Resource is just the absence of heat. It looks pretty mild when we look at the best performing weather models and kind of isolate maximum temperatures expected over the next 5 days or over the next 10 days. You don't see much above, the mid to maybe upper 80s. Some places of Iowa, Minnesota, maximum temperature is probably in the upper 70s at most. And so this does look to be nearly ideal. And while we don't have a lot of confidence in forecasts beyond 10 days, at least not confidence in the details, you do see here, and this is updated every day, the Weather Service's, August climate guidance. Temperatures on the left, precipitation on the right, and so you do have warmth, maybe some scattered dryness across the western plains and western Canada. But if we outline the principal U.S. corn belt, doesn't look like much in the way of threats. And I think this also kind of underscores the current pattern largely stays intact. Heat and dryness, the Rocky Mountains and westward, routine summer conditions, farther east, and that really encompasses most of U.S. ag production. So again, not looking at U.S. weather threats today, and I think the trade can kind of see and feel 10, 20, and 30-day forecasts and don't see much in the way of adversity. And I think on the background of this too, one of our maybe bigger picture thesis, outside of weather, everyone can see weather and crop conditions, but it's the need for a demand driver. It's how fast we can sort out this looming large production of corn. I think it may be difficult without confirmation, concrete details surrounding trade deals that include purchases of U.S. ag. And so we'll be waiting on those between now and August 1st. But the Brazilian corn crop, I think, is starting to validate those really, really high numbers. And again, sorting out whether the Brazilian corn crop, the total corn crop this year is 140 million tons or 150 million tons. That's less important than it's going to be a record, we think. Even EMEA, the sort of top analysis firm behind what's happening in Mato Grosso, has this month raised Mato Grosso corn production 3.7 million tons, just about 54 million tons, a record. Mato Grosso is now producing more corn than Argentina. Harvest has been slow, and I think that explains a lot of the strength in the Brazilian cash corn market. And even today, or as of last Friday, they're only 40% complete. A year ago, they were over 70% complete in safrinha harvest. And they've only harvested, I think, about 21, maybe 22 million tons so far. The domestic market in Mato Grosso alone is going to take 26 or 27 million tons. So I think all that corn is being absorbed very quickly by Brazil's domestic market. But in the next week or 10 days, the amount of newly harvested safrinha corn will surpass what the domestic market needs. And I think that's another risk to the feed markets. Brazilian FOB offers or offers into the global market are pretty firm and above the U.S. Gulf market. But I think that may change in the next couple of weeks as we do start to build piles of corn in northern Brazil. So that's something else that's on the radar and something we're thinking about in terms of price risk for the second half of summer. We're already kind of starting to see that play out. So the Brazilian cash market, we get a daily cash corn index, and that's been plateaued at about $5.20 until about the last 5 days. So as we're getting closer in northern Brazil to exceeding domestic market needs, in terms of harvest, the market does seem to be shedding premium a little more intensely. So in the last couple of days, that market is down 30 cents per bushel at $4.90. And like 2023, which is a normal year production wise, but also a slow harvest, you probably don't find lasting lows in the Brazilian cash corn market until August, maybe early September. So unfortunately, just kind of a flood of bearish input being thrown at the feed markets. Favorable U.S. weather, very highly rated U.S. corn crop. And the South American market also starting to extract premium and look for export demand, as the U.S. will have to do moving forward. So it's just going to be tough, again, to sort out what will be a record U.S. corn crop. So I think that explains the markets. That's the beginning and end. It's not terribly complicated. Weather is good and looks to stay pretty good for the next 10 days, maybe 45 days. And so we do have new balance sheets, new yield estimates to provide the framework for what is the downside risk in the corn market. But you got to you get a $1 gets in for 30 days, and all that will be published in the next couple of days. And of course, we've got the July WASD on Friday, and we'll see what they do with by class wheat supply and demand, things like that. So it's going to be an exciting time, but in the price trend to us is still down. Recoveries or opportunities. So think about that when we are managing risk. All the best in the market today. We'll be back tomorrow morning with a full rundown of what's happened over the next 24 hours. Thanks for watching.